What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. So as always, we have our broad market, we have our core list of companies, many of which are coming into an earnings cycle, and then I have 7 trade ideas to share with you towards the end of today's video. Some of these ideas were from Discord members, so if you want to chat with myself and other traders in real time, definitely check out the link down below in the description. It's completely free. We also have some other resources down there. We only have 4 days in question. Of course, we had a shortened trading week with the holiday, so let's jump into these charts. Kicking things off on our SPY weekly chart, looking at structure and location as we always do. For structure, we certainly have a bullish candlestick, right? This is a hammer candlestick, not a hanging man. It's certainly not bearish. If you're a longtime viewer of the channel, you know that we've echoed that sentiment ever since we've been printing candles like the ones I'm circling right now. So what does it mean? Of course, buyers stepped up off the lows as noted by the lower wick and were able to close and retrace more than 100% of the down move, right? This is a green candle after all. So all of that being said, structurally, this is a bullish candlestick. The next thing, location, where are we, right? We did take out the prior week's high, which just so happens to mean we did close at all-time highs here. We also respected the prior week's low, which keeps one time framing in effect to the upside. Basically, all that means is that we're respecting the prior week's lows, and you do not want to short whenever this is going on. If we get more choppy action, yes, you can maybe speculate more about a potential pullback, but as the chart sits right now, it's not the most risk-friendly entry for longs, and it's also not an entry that I would take for a short. So we repeatedly hit home this point that we don't try to time tops, and instead, in strong bull markets and uptrends, we just try to buy pullbacks, right? So a support trendline pullback here would mean there's your buy. You just place a stop order underneath, and you're looking for something like this. These are longer-term thoughts, of course, right? The next one that you could pay attention to, which is a little bit tighter, would be this support trendline, right? So that's drawing in from anchor, touch 1, and then almost touch 2 in here, but a pullback to that, great, that's a buy. You put your stop underneath here, and you're looking for this uptrend to continue. So from a weekly perspective, the uptrend is still very much intact in terms of volume, a slight increase, even though we did have a shortened week, mainly due to that large gap down. So let's drill down to the daily now and talk about some tradable levels into the upcoming week's worth of trade. So popping the levels back on, a couple of things that I want to clear up. First of all, if we take out the high here, it's just blue sky levels, right? Whole and half dollars, intraday levels that do form. One thing I do want to talk about is the structure, right? We've talked about the poor structure on the way up now for quite some time. And that doesn't go away just because we had 1, 2, 3 kind of nasty days with liquidation break type activity. All of this poor structure underneath us, it still exists. It hasn't cleared up just because we had that pullback. So let's walk through it together. You'll notice that this line goes directly through the middle of the candlestick there. And what does that represent? It represents the start of poor structure. If you were watching on Friday, you know that we had the gap up and then it just went all day, right? We saw that grind to the upside. So in the morning, we actually put in single prints on the market profile. So this is the section of the chart that I'm referring to and the equivalent of that SPY level that we just drew out. As we know, that's going to offer very little support. Just look at the thin volume in this area. If we were to break down underneath that start of the single prints and just to flip it back over to SPY for us, that's going to be about 433.66. I would expect a move to at least the top of the gap, if not fill the gap all the way from 432.32 down to 431.71. Now, Thursday's action was a little bit more interesting, right? It did see a massive gap down, but we filled the gap to the upside and we stopped at the gap fill, exactly what a very technical market should do. So that was very interesting to me that we had, very short-term technical traders controlling what was going on with price. That's something to carry forward, right? We don't yet have a strong other time frame buyer, as it's called, stepping into this marketplace. So what I would watch for is the poor structure, if broken, to fill quite rapidly that gap and potentially underneath that back to the top of the 2-day balance highs. But more importantly, this is the next main area that I would have as a target, right around 427.16, if we start to get any sort of selling activity. And again, are we shorting up here expecting that move to happen? No. But if that move starts to unfold, we know where it could potentially be headed. So I would look for a long at this area when we come down and potentially repair that structure. Another thing I want to point out before we move on to the Qs is this support trend line, right? We did see that gap down. We found support at this area. So any pullbacks or consolidation should be thought of as bullish into this upcoming week. So consolidation at the highs sideways into the trend line, fine. That's more bullish than bearish. A pullback into it, fill the gap right here, that's a buy, right? You put your stop just underneath and you're looking for it to revisit the highs. So that's a risk-friendly way to play it. If it breaks, where do we think the market's going? Probably to this level here at 427.16, as we just discussed. And underneath that, all of that poor structure that we've discussed for weeks and weeks on end now still remains targets to the downside. Jumping over to our Qs now, the structure is a lot better here, right? It's not as gappy, it's not as tight compressed range days. You can see we had some expansion and then a pullback and that expansion again. Back here was some expansion. It's just a little bit better than what we have with the SPY. But again, I would not be looking to initiate new longs at this level. Sure, you could take the day trade, right, up to, try to revisit that all-time high. Of course, after that, you're looking at blue sky levels, whole and half dollars, intraday levels that form. But in terms of swings, and this is going to apply to tech as a whole, right? This is generally not the best entry for a swing trade. What you would want to see it do is either consolidate sideways through time into the support trend line and then maybe break, maybe form some sort of pressure cooker top underneath our all-time high level at 362.67. To the downside, your area of support that you want to see hold is going to be here at 355.20. Underneath that, mechanical low. Again, this would coincide with a trend line break and maybe a nasty day in the S&Ps. Your target would first be this mechanical low at 352.73. After that, two-day balance lows at 348, or let's just round that up to 349, right? So those are going to be the comparable levels. If SPY has a nasty time this week and goes to that mechanical low that we discussed, that would be the equivalent here in the Qs. I do want you to keep a close eye on the push and pull that still exists between the XLF, so that's the financials, as well as the XLK, or the Qs essentially, right? The tech sector. So the push and pull here is going to potentially keep the rotation in the market going. Keep a close eye on it. If you want to just keep it real simple, watch for relative strength in the Qs versus the SPYs and vice versa. That'll tell you what could potentially be unfolding in this market. And last but not least, we have IWM Russell 2000 and our small caps. And this one is just back in chop zone, right? We've defined that as here from 215 up to about 227. We have moved back and forth now very rapidly through that 50 SMA. That's a dead giveaway that there is no, apparent and obvious trend. So for now, basically it's telling us neutral, right? And we've looked at this as a risk on versus risk off sort of ETF as opposed to an instrument to outright trade. And that's going to align perfectly with what we've discussed in the SPY and as well as the Qs, right? Basically neutral here. We don't want to be aggressive with new longs with poor structure underneath us, sitting at the highs. And again, IWM is sort of echoing that sentiment. Now, if this starts to take out the all-time highs here, then yes, maybe this is an instrument that you want to trade. As we know, this has been consolidating for quite some time after a massive run up, right? So we could see potential trend continuation from a longer perspective if we start to take out 235. Maybe you look for longs in the IWM, the small cap stocks, and look for the regular broad market, if you will, quote unquote regular, right? To continue higher, right? Maybe that would coincide with a pullback as this goes sideways, the S&Ps pull back, and then as this breaks out, it coincides with the SPY moving back to the highs. These are the things that I'm thinking about, right? How is the market moving as a whole? What are the different sectors saying? Risk on, risk off. As this one sits right now, we know it's neutral. Potential upside targets, again, probably looking at that double top closer to 233. If you did want to trade it short to the downside, I wouldn't really target much more than the support trend line that's been oh so strong ever since really the beginning of the year. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. So jumping right into Apple, my goodness, what a freight train this one has been. Made it a new all-time high. A very impressive move to the upside. Just like the rest of the market, I'm going to advise that now is not the best time to be initiating new longs inside of Apple. Any consolidation and flagging that happens above 140.66 is probably the best case scenario. Anything worse than that, and I say worse very lightly, right? Obviously, this is a very strong uptrend here, but a deeper pullback rather, based on Fibonacci's, could bring us into the gap fill. If we do something like this, we know that the 38.2 is generally the first area we want to consider, and that's sort of right in line with the support trend line as well as the gap area right around that 138 mark. So if there is a really aggressive pullback that breaks the 140 and continues slightly lower, this is an area I'm certainly interested in getting long Apple on. You place your stop just underneath and you look for the reversal first back into this range up over 140.66. The line in the sand for Apple, if this does pull back very hard, which again, I'm not anticipating that, the uptrend is very strong and still intact here, here. But if it does pull back, I don't want you to be surprised, right? The area we need to hold is basically the prior breakout area, which is at 135. So if Apple does this, maybe comes down, does this, 135 needs to hold, and it needs to hold as a new like daily higher low, right, to potentially continue this uptrend and make forward and upward progress inside of Apple. Again, not trying to time the top, but not an ideal location for new longs up here at the highs. So Netflix, also not one that I'm overly happy about or willing to go long on at the moment. It just hasn't been for the past while, right? This breakout of this range was very choppy, driven by mostly a gap, and then just back and forth, sort of a fake break back into the range. Just not ideal, right? You could draw in a resistance trend line like this. It sort of was violated slightly on the gap up, of course, but now we're back below it, so you could keep a close eye on it. For me, I'm just not really interested in taking Netflix long at the moment, so I'm not going to leave it on the chart. Really, I'm more interested in this 2-day potential flush point here at the lows. It was a huge failure on the breakout, right? We failed back into the range. So if we were to take out those 2-day lows again, and that's at 528.60, I would watch for a move to potentially fill the gap underneath us, right? That's my first inclination. I haven't really liked going long Netflix in the past. It's just not something that works out. The technicals are just, they're choppy, right? The moves here aren't very clean. So I would really watch for the short-term bottom giving out here, leading to this gap fill. Not really interested in taking the long. There is the gap above that you could use as a target up around 546. After that, I'd really keep a close eye on 557 if it even wants to do that, right? This here looks like a sharp rejection of the move higher to me. So partially biased to the downside. So Tesla did exactly what we wanted it to do. If you remember in last week's video, we said if it's going to pull back, it needs to hold the two critical moving averages, so 50 and 200 SMA, as well as the breakout point. And what did it do on Thursday? Boom, it held. The other thing we threw in there as a little cherry on top, right? There's your support trend line. So a number of things offering support at 630.50. It held, and now we're just looking at that as a daily higher low. So what we need to continue the uptrend, of course, is a new daily higher high. What would that mean? Obviously coming up to the top of the range again and at least testing it at 694.18. If it goes higher, keep a close eye on 700 psychological, but there's about a 10-point move, so $10 move up to about 710, where our next critical resistance is. There's a lot of price history around that. We have prior resistance, then found it as support, then as resistance once again. So 710 might be a sort of a thorn in the side of Tesla going forward. Keep an eye on that. The daily uptrend and reversal is well underway here. So partially biased to the upside based on the large green candle, as well as holding it into Friday, right? I think that's important. To the downside, 630.50 is still the critical support. I would want to see a first touch bounce on any sort of retest, so this, but if we can't make a new higher high, so above this, I would look for the flush on the next test, in which case our target underneath is 600. Leaving Alibaba intentionally zoomed out here so you can just remember it is in a very long-term downtrend. However, based on this nature here, this extreme falling off of a cliff nature, I would not be, looking for more aggressive short down here at the lows, right? Just like the opposite of the broad market where it's at the highs, I wouldn't really looking to be pressing right into BABA at the lows. Instead, I'd wait for the pullback, just like the market. The critical area I would watch for is here at 210. Any sort of inverted hammer or upper wick that pierces it, closes back below. Your short is underneath that day's low, basically looking for something like this. Your target would be 205, and potentially, if you want to be very aggressive, back to the low here around 198.26. Wouldn't really look for much more after that, though, after this, right? It would really have to be catalyst driven, some sort of news to come out of China. Obviously, that's what drove this massive drop lower, but another one of those would have to come out immediately to sort of, in my opinion, get it underneath that 198.26. I think it's more likely to maybe do this and then dribble sideways in a range like this into the upcoming week. Facebook held support exactly where we needed it to hold support and just continues to be an absolutely beautiful chart, right? We have a flag here, breakout. We have a flag here. Again, remember the earnings cycle caused it to be choppy, but technically it was a breakout, and we continue to flag here, continue to flag in this most recent week of trade, holding on to that, 345-ish area on the chart. So to me, looks good holding this consolidation. One thing I want to warn you of, though, is that remember, on this channel, we're never a fan of initiating a new position smack in the middle of the range, and that's exactly where we are on Facebook. To me, I would really wait to see if this either revisits the low end, end, in which case you take the long here, or if we revisit the high end, in which case you look for a little day of maybe consolidation. It could be one day, it could be half a day, right? A 4-hour bar, and then you take the break of this pressure cooker top into blue sky territories over 356.74, whole and half dollars intraday levels that form, right? If we continue sideways into the support trend line, that could also be a potential buy at whatever point we contact that area. Keep in mind, earnings are, around the corner on many of these companies, but Facebook, phenomenal uptrend. NVDA, although not earnings, do keep in mind the split around the corner. Now, as this chart currently sits, we have a gap up above us, right? So that gap is going to fill from 802. Wow, big numbers here. 803 just about. We'll round that one up to about 813. So about a $10 gap above us to close. That is the potential long based on the hammer that printed on Friday. But a 2-day balance is in play. So you're either looking for the easy long over here to fill the gap, or the reluctant short underneath the 2-day lows to trade back down towards this breakout point, which is around 775. We'll just use a nice round number since we're trading such a large instrument at this point. I wouldn't really be overly ambitious with the short, right? If we just zoom this back out, remember our trend is overwhelmingly up. You don't want to hold on and overstay your welcome, if you will, on the short. Obviously, over the highs here, you're looking at blue sky levels. That's going to be above 835. If we just grab our other tool, we'll mark it in there and move on to our Microsoft. So Microsoft strikes me as being more similar to the Qs as opposed to Apple or even Facebook, but we are sort of forming a bit of a daily bull flag. Obviously, if we can consolidate and hold above 275, that would bode well for Microsoft here, and you're taking the break into blue sky territories, whole and half dollars intraday levels that form. This is turning into a little bit of a mechanical low, though, and what I mean by that is very technical traders are buying this level, right? That's why it's so precise time after time after time, and when that happens, those are generally shorter sighted traders, and what I mean by that is not short as in downtrend, is just short as in short time frame duration. They're looking to take profits in maybe a day, intraday to maybe a day or two. So if that level is breached, expect a little bit of a stop to be triggered, right? And I would really look for the gap fill underneath from 272.50 down to 271.70. Anything underneath, really looking at 270, the whole dollar, to hold as support. That would technically be a violation of the support trend line, but I don't think it's the end of the world given the nature of this strong uptrend here. If we throw the fibs on, just to give us an idea of what could potentially be in store, a 38.2 pullback is down here around that 266 area. And last but not least, the beast, we have Amazon, leaving this one zoomed out again intentionally to show you how it has set a new all-time high. Very impressive bar there on Tuesday, that was. A lot of people were watching that. I actually didn't catch that one, but a daily bull flag, right? Consolidation up here at the highs. What is that telling us? Price acceptance, right? The more time you can spend accepting prices here, the better chances there are for more price exploration to the upside. So as long as we can sort of hold on to 36.80 and consolidate, maybe give it a day or two. I also like the increase in volume. I also want to point that out while we're talking. When we can consolidate in here, build up more energy, more potential for new longs, that's a good thing. Any break of 37.50 and we could be off to the races again here in Amazon. On something this expensive, you're looking at $25 marks, or let's just go 10, 25, as well as $50 marks into blue sky territories. Any sort of failure of that range there at 36.80, sure, you could look at that Thursday low. We'll grab the other tool. But really, if we were to get here, I would really imagine Amazon would want to do something like this, back test the breakout point, the prior all-time high that was touched twice at 35.50, and then make a run for that all-time high, the new all-time high, of course, once again to sort of give us a back test, right? So that's how I'm thinking about Amazon. Obviously, the breakout here is extremely bullish. If you have not hit the thumbs up button and subscribed to the channel already, what are you doing? Go ahead and do that now, and then we'll get into these trade ideas. So Comcast is the first one, forming a bit of a pressure cooker top here with multiple touches to this 58.60 mark. I would look for the day trade breakout above that, or if you're someone who likes to swing trade, you could look for an entry on the pullback to the 50 SMA and or the support trend line here. Your stop would go just underneath. Keep in mind, if you're doing this with options, buy some longer dated ones because earnings is right around the corner. If this is to violate the support trend line here, I am not interested in taking the trade going forward. Next up, we have Snow for Snowflake, and this is simply a continuation play, right? We have a very, very impressive bar there on Friday, happening on some really solid volume as well down below. I also like the fact that this is kind of a poor man's inverted head and shoulders, right? And we had a kind of neckline like this, very sloppily drawn. But anyways, you get the point here. It's a bit of a bottoming reversal. I also like the fact that this is happening on elevated volume as a whole. So targets to the upside, if we can take out this 275-ish area, would be 300 psychological and then 325, right? Ideally, this setup gives us some kind of resting bar, a little harami in here, a doji, something, and then we take the break of the 2-day highs, that 275 area, to trade up towards 300. If we don't get this, ideally, so let's rewind. Ideally, we put a stop loss underneath the low of the resting bar. If we don't get that, what I like about Snow is the fact that we've respected the 50 SMA in the past here, which is signaling to me that it wants to trade technically. So maybe the 200 would be respected, which is this green line kind of smack in the middle. It's very immature, so you would have to keep a tight stop, keep a close eye on it, but it would be a potential stop area for me if you're someone who's trading this as a swing, right? So next up, we have TSM, which is Taiwan Semiconductor, and again, this may be sensitive to Chinese news. Taiwan kind of in that Asian marketplace of things, right? So I'm not going to lump it in with China, but anyways, a break of this horizontal level at 120.65, trade up towards our next major swing high, which is in here at 127.37. Would not be interested in this trade if it starts to take out this low, some consolidation underneath. Fine, take the break there, but as a swing trader, I really wouldn't want to see it violate the 50 at this point. Earnings on this one are even tighter, so if you're a swing trader, maybe you just avoid this particular idea until earnings have passed, and if it's still consolidating underneath, if it doesn't suffer from some massive gap up and or gap down, not and or, but or gap down, right? It can't do both at the same time. Next up, we have AA for Alcoa. This is an aluminum company, I believe, but we're breaking a resistance trend line. Back tested it here. Looked like we wanted to fail underneath, but strong reaction to the upside here. So at this horizontal level at 38, just about 37.84, call it what you like. The 50 SMA is baked in. If we can get some acceptance above, I can see this easily starting to run a bit, and our next major area of resistance and target would be up here closer to 41.25. So let's mark that in there. And again, just based on a quick eyeball risk to reward, that's your reward for a potential, if you're taking the break, your 50 SMA would be the stop loss, right? So underneath, that's easily a 3-to-1, 5-to-1, whatever to 1. There's some potential there to make that a worthwhile trade. Again, earnings on this one are around the corner, so be cautious of that. We're coming into an earnings cycle, obviously. Next up, we have AstraZeneca. This is in the healthcare space. If you watch the midweek market updates, you know that healthcare is on fire, and this one has pulled back in an overall bullish channel. So just looking for the reversal. We saw the hammer print on Thursday, followed up with a nice green candle on Friday, so looking for that continuation higher. Your target would be up here at the highs, close to 61 on the bounce. Stop loss would go underneath the channel support trend line. Next up, we have Square. Earnings on this one a little bit further out, so we have some room to sort of trade some options, right? We have two hammers back to back off of a support trend line, forming a higher low and a higher high into the gap above. So first target is obviously the gap fill. So over Friday's high, fills up to about 244.50, we'll call it. And then we're just looking for a next major resistance there at 252.75. Your stop in this case is just underneath. You could do it a couple of ways, right? If you're a swing trader really looking for at least this, your entry would probably be into this gap. You could put the stop down here. You're looking at about a 1-to-1, right? So not ideal, but maybe you move your stop break even if the trade starts to work out. There's a number of ways to do it, right? But basically, underneath the support trend line is one way, or underneath Friday's low, right? If you don't want to see it violate that and potentially form a new lower low from a day-to-day bar-by-bar perspective. But that's my thinking there on Square. Looks fairly bullish with those two hammers. And lastly, we have ABBV, which once again is a perfect pressure cooker top. Multiple touches. You could even call this a bit of a double bottom, right? So we have this, your neckline would be here, which is technically the pressure cooker top area at 117.50. If you break it, you're looking at blue sky levels, $1.50. Sure, bump in the road here at 118.28. Keep that in mind. Do note that we also have an inverted hammer. The same was, true with a couple of our other setups here on the list. But for now, as long as we consolidate underneath and don't really violate the 50, in my opinion, on this particular setup, I would watch for a break of this neckline for that blue sky level breakout trade. Earnings a little bit further away on this particular company. So that's going to wrap up today's video. I know it came out late, so if you made it all the way to the end, I really do appreciate you. Again, I hope you all have a green trading week, and I will see you in the Discord on Monday.